would share. We're in a space right now, so I'm gonna just let y'all listen in. This is T's Crypto Spot.
And instances where DeFi protocols are incentivized to hold a nice amount of the asset.
If you want to chime in, go to the X Spaces.
In the
Real
event of an
crypto queen
emergency
on
or
X.
catastrophe, they can reimburse them with actual XRP or whatever assets. Because I think it's going to be several assets that you see that happen with. That's what. Now the question is, how far away are we from institutions wanting to do that? And the reality of that is, I don't know, because Bitcoin is currently serving that store value narrative for people with large amounts of capital and institutions. So you're gonna have to see some sort of paradigm shift happen where these folks see the value in actually holding XRP, right? Like not just using it, but no, we want it long term. And it has to be more than, cross-border payments are excellent with this asset, so let me go out and buy 100,000 of them and just hold it because it facilitates payments so well. No, it's going to take more than that. And I have my thoughts on that, but I don't want to hog the space, so I'll let you give some thoughts as well.
Oh yeah, no, for sure, bro. You could have went there. I think people need to hear it, especially people that may be coming from like Block Nation or just randomly popping in, because a lot of people are unaware. I feel like there's always new ears anytime we do any type of content. But no, I totally don't think you said anything wrong. Of course, I don't have the same expertise you have on the technical side of things, but I got sense enough to know that it's going to take a lot for people to see these price predictions that I keep seeing on my timeline, which is kind of what prompted me to do this as well. Because like right before you posted that, I saw people, with these high expectations for next week, and I'm like, oh no. And then I saw your post, and I'm like, yes, we got to do a space, because I think it's a lot of moon boy stuff going on, and people kind of need to know how this stuff works on the technical side. And so I think you should get into that maybe a little bit. You're not hogging the space at all whatsoever. That's why I brought you over, because I know you could give some insight that I'm not able to give on that side of things. And anybody that wants to come up and chime in, feel free to send a request if you'd like to chime in on this as well.
So the price predictions, right? You're going to need to see a lot happen. And look, I want to be transparent. I think the world of the technology, and I think it's capable of great things. But when I started doing content, I told people have a minimum of 10 years for your outlook conservatively regarding a super high price point, right? That just takes time. Bitcoin didn't go to the moon overnight. It took years, and with Ripple as a company and XRP being so disruptive, it's kind of one of those things where it's seen a lot more resistance than Bitcoin. Bitcoin wasn't really disruptive, right? It wasn't displacing large institutions or correspondent banks. It essentially became a tool for them to enrich themselves and their friends. So, the whole narrative that retail got Bitcoin to $100,000 plus is a fallacy. And anyone who tells you that is either lying to you on purpose or they're ill-informed about how Bitcoin got to where it's at now. So for next week, I think people need to remain conservative. There was a White House official who came out and stated that you could see a huge influx of capital to the tune of 20 trillion flooding the crypto market after legislation is passed. Well, I kind of agree with them. Yeah, you could see that, but you're not going to see it next week.
Right. That's the thing. Yeah, and I think the White House official was saying, I guess once the Genius Act was signed, and I was like, that's fairly quick, because that would mean that would be in the next couple of weeks.
Yeah, the only way now look, here's the thing. There is, and I'll I'll leave the doom and gloom alone for now, and I'll get a little bit more optimistic. And I'll say this. There is a possibility something like that happens if the players behind the scenes know what's coming for said assets, right?
Right.
Like there's been sit downs. They've been like, okay, yeah, we want treasuries to go on these distributed ledgers. We're going to start collateralization. We're working on DeFi regulations as well. Maybe there's DeFi stuff within the Genius Act or the Clarity Act. Who knows? And they already have the play written out behind the scenes, and then they front run essentially and get these assets and start buying them up before they hit crazy prices and sit on them as institutions, right? And start building their reserve type pools behind the scenes with these digital assets before you even see full institutional utilization, DeFi, lending protocols, collateralization on the ledger, tokenization, and value transmission and exchange happening, all of that, right? So now if something like that were to happen and they all had the inside track prior, well, yeah. And even then, like, right, if that were to happen, realistically, if what I'm saying were to play out on the optimistic scale, you see probably a $15 to $25 XRP or something of that nature. You're not going to see $27,000 or $1,000 right away. That just takes time. And I don't think institutions are that level of ready to go out there and accumulate and long-term hold that much XRP or any of these other assets that are utility-based at this moment. Not next week, right? Do I have asinine and or what some people would call retarded ideas behind what I think these assets could get to? Sure. Yeah, I like a little bit of moonboyism, right? But like I said, all of those things that I stated usually take time, right? And some people have or are of the belief that these things have already been worked out behind the scenes, right? They already know what they're going to use. It's already been chosen. But here's the thing. If you're basing that off of utility, then you have to consider the technology as well. And then you have to ask yourselves, is it fully ready? Right? Not just surface ready or proof of concept testing ready. Is it really ready to correlate with traditional legacy system databases where there's a huge efficiency gap in terms of performance, speed, etc., right? And even quantity. So there has to be a bridging of the gap, so to speak, right? And I think protocols like Overledger, Mojaloop, and several other OS-based platforms that are designed to connect enterprise organizations with their blockchain or network, I should say, of choice, are going to kind of bridge that gap. But you need to see that and more, right? And then that's when the ledger-specific amendments come into play regarding those communicative abilities for cross-chain communication. Not just Swift's CCIP, right? You need more than that. There are layers of communication, right? This is why you have things like an OSI model, right? That describe interop when you're talking about traditional IT.
So this is a Twitter space with T's crypto spot. So this is T. So I'm letting him give y'all a technical side of what's going to happen next week, or not what's going to happen, but just setting proper expectation.
Like I said, the fact that they're still working actively, developers on GitHub and other platforms, to try and, get some of these amendments passed and some of these solutions built, tells me from a technological perspective, we're not there yet. And I know people don't want to hear that, but I know what I'm saying. And what I'm saying is there's still work to be done before you see this thing go full scale, full utilization mode. So if you guys see a dip or you see a crash or you don't see what you want to see by next week, it doesn't mean it's not going to happen. It just means that there's more things that are going to have to happen. And one thing I will say, I want to bring up Costa, because I think we kind of differ in terms of the importance of technology and how it can be a catalyst for mass utilization or adoption. And he more so focuses on the retail side of the house. And what I will say is this: retail is important. Okay, I'm not going to say that we're not. But what I will say is Bitcoin, using it as an example, didn't get to where it got to by your average Joe going out on an exchange and buying a bunch of it and holding it, right? That came from some powerful individuals with large amounts of capital. And usually when you see stuff like that happen, even with Ethereum, there are major players behind the scenes, not just guys with a lot of money. You're talking, there's organizations, hedge funds, those type of groups that are pushing, these assets to those types of prices. Now, what I do think, and this is a point that Kashta made before I heard this point from a few other gentlemen. Now, neither one of them really know each other like that. So both the three of them had their minds in the right space. Basically, it was stated that it will eventually get to a point where retail is using it without even knowing they're using it. And another person who has brought that up is Baggins, right? And so we have to give him credit too on this, because he's also another one who stated what you need to see is for crypto to get to a point where you're doing transactions and you don't even know you're interacting with the blockchain environment, right? Now, your institution may know it, the ones behind the scenes that are making that happen and have their systems interconnected with those systems. But when you start seeing that and it's used in everyday life by retail, by that time, it's too late, right? But by the time that happens, you're priced out. Like, you're not going to be able to, unless you're a multi-millionaire, you're not going to be able to afford assets like that are being used in the background like that and integrated into retail systems where we don't even know we're touching it. So, I think I don't think that happens next week. Okay. And like I said, I am not a fan of coming on here and telling people what they don't want to hear. But you know what? I have to be honest with people and say, look, and that's one of the reasons I did the post, right? I didn't want to put my opinion out there. I didn't want to sway anyone. I wanted to see where people were psychologically. What are people thinking? What are they expecting? What do they think happens in the short term? So, with that being said, those are kind of my thoughts on it, and I'll let Queen take the mic back.
Oh yeah, for sure. No, I think I think you on point. I think that I think later on in the year, once we start seeing the DTCC roll out some stuff, I just think it's just a couple things that needs to happen. Like, the banks literally just got the green light, so I don't think people realize how behind they put us back in 2022 or 2023 when they put those roadblocks up with the banks. That really put us significantly behind. So these institutions are just now publicly, let me put it like, publicly entertaining crypto, even though we know we all know in the background they've been talking about this, but publicly they're just now entertaining crypto. So this stuff is definitely going to take time. I just think that 2025, this is the year that we get the legislation that we need to properly move forward. And then I think you start seeing institutions and stuff maybe scale up in 2026 a lot more, or maybe towards the end of this year. But for people thinking that they're gonna see a $12 or $20 or $1,000 XRP next week because FedWire went live on the 14th. I just want to set a proper expectation for you. That's all. Because I think a lot of people, and that's kind of where I was kind of speaking from. I think a lot of people are not really understanding what's happening on the 14th. Like, it's just going to happen all at once on the 14th. Like, that's just the day it all, the system flips or whatever. So, not saying that it can't. Like, I hope I'm wrong. I hope we do see some crazy price action next week. But we have to be realists here. So just setting proper expectations, especially when you're like in a position of leadership. So you just don't want to lead people in the wrong direction. But Aqua, what's good?
Wait, I'm gonna hold on, guys. I'm gonna jump off real quick, and I'm gonna come back in. I gotta take a phone call, and then I'll be right back.
Okay, all right. Aqua, what's good, bro?
Nothing much. How you living?
Man, you already know, bro. We out here. We out here. No, we just wanted to set proper expectations next week. That's all. I think with the Fed wire thing happening, I think a lot of people, I hope people didn't put in 2-week notices at their jobs. That was why I wanted to come on here, and do this now, and not when when next week is like a nothing burger, as far as price action.
It usually is a nothing burger. I mean, I would, just, paying attention to what matters, which is like, what really moves the markets, tariff talk, when Jerome Powell comes out and gives out his reports, it's just, I feel like that ain't nothing going to change next week. Everything is going to stay the same. We are not going to see, I mean, if we do, like you're saying, like that's going to be crazy. And I'll gladly say I was wrong. But typically when there's events like this, we usually see a market pullback, which is kind of crazy. Like, I don't know if you guys remember, but it was the first White House crypto week that they had earlier this year, and everyone was ranting and raving about that as well. And what do you know? Came Monday, the market was pulling back, and the market pulled back all week, as a matter of fact. So, yeah, I mean, I think what you're doing is a good thing, because there's too many people out here preaching all these unrealistic numbers that haven't come to fruition yet. And like, although those people who say that, they might have like strong conviction and really feel deep down that that's the case, we as leaders and leadership, in the space, we have to understand that like, people listen to us, and some of these people take things wholeheartedly. And the last thing we want to do is, get somebody wrecked, putting in rent money or money that just shouldn't have been in the market. And you listen to somebody, and that somebody got you itching, and then the market pulled back that day, and you're like, yo, what's going on? Now the rent is due. Let's just, I think what you're doing is very mature. So, good stuff.
Oh, for sure. No, I appreciate you for coming and chiming in too. D, I don't see you in here. Sorry, I was in the middle of trying to bring him up, but I don't see him in the He was saying he sent the invite, but I don't have any requests.
DeFi King up here, or is he not? He's just a listener.
I think he might just be listening. I sent him an invite, but he may just be listening in. He may be at work or something.
Yeah, he might be grinding. So.
Yeah, D, I don't see you. You're gonna have to send a request. Yeah, I see the I see the mentions and stuff, but I don't see you where I can Let me see. Hold on. Sorry, guys. Give me 1 second. I don't see your name in the thing. Like, send me a request, because I'm not getting it. I mean, I'm not seeing you. Like, I don't see your name in the guest, like, nowhere. Invite speakers. I just sent you an invite to your DM. All right, there we go. Was that it? Oh, that's DeFi King. DeFi King, what's good, bro?
Yo, what up? Can you hear me?
Yeah, I can hear you. What's good? Yeah, bro. I was hoping to hear your just your insight on, how you feel about next week, because of course we always see the Moon Boy stuff, so I just, me, I want to set proper expectations for everyone for for next week, because it's just, a bunch of BS going around. So I kind of wanted to put some things into perspective for people that are expecting, some huge price action next week.
I pretty much echo what Aqua said. Every time we have one of these events, in the last 4 years I've been in crypto, it always goes the opposite way. People psychologically expect a price increase, and then the price drops. They like to do that to you when you're expecting it to go up, and then they start shorting the market. And then also traders short the market too, and they like to short events. So I think it's going to be a nothing burger, honestly.
There we go. Yeah, no, I couldn't agree more. I think I kind of want to get into the Fed wire thing. You got any insight on Fed? I think people need to understand what that, about Fed wire and what that is, what that truly is, as to, why this is going to take a second. It's why stuff won't happen specifically on that particular day, but it is the beginning of the banks making that switch. But I don't think a lot of people are getting that in the space. So I don't know if you have any insight on Fedwire or like what that is, so that people can kind of understand what's happening with that.
I really didn't have anything like prepared. Honestly, I kind of saw you guys up here.
Yeah.
I didn't know what you guys was talking about, so I wasn't really ready to talk about nothing. What I can say is that all of the chains that we follow, the utility chains, but they're public. So if they start to run any kind of transactions or anything through the public chain, we'll see it, and we haven't seen it up to this point. So I don't really expect that to change with the Fedwire thing as well. I follow, obviously I'm always talking about XPR and the Metallicus ecosystem. And Marshall himself has mentioned that the beginning of Fedwire and the FedNow system is not going to use blockchain to start. So he's actually said that out loud. So, I mean, that's why I really don't expect.
Hold on, say that one more time, bro.
With that when FedNow goes live in the beginning, it's not using blockchain rails yet.
Okay. No, I just want you to say it so everybody can hear you. I want to make sure nobody missed
it. No, for sure. So I mean, like I said, I didn't really have anything prepared to talk about. But what I would say is, obviously, it's a huge milestone, right? We've been waiting on it, and we shouldn't look at these milestones as things that we don't celebrate just because the price doesn't go up. It's still a huge win in moving forward in the right direction, just like these regulations are moving forward in the right direction. It just gives us more time to stack. I always tell people, like, you are being given a gift because you have this information, you're early, and you can still continue to stack these tokens. So for me, I'm never in a rush. That's why, Aquaman's got, DeFi, teaching people how to use DeFi, how to make your assets work for you, how to accumulate more assets. And that's what I'm always just trying to talk about. Mm-hmm. Because once the hopium gets here, people are just going to wish they had more tokens. They're going to wish they'd been stacking more. So instead of wishing, just do it right now, while the price isn't moving.
Exactly. I think people need some type of motivation or something to, continue to buy. So they need to see the price moving. So when it's not moving, they're kind of discouraged. And I think that plays a part in it as well. So
yeah, it definitely does. The psychology is backwards. This is the time that you should be going all out to stack, all out to learn how to make your assets work for you, setting up a plan for what you're going to do after, versus watching the price. Because once the price gets here, the rest is going to take care of itself.
Exactly. You want to kind of because I know some people, and everyone has their opinion on getting into DeFi protocols. I know Aqua can chime in on this as well, but what do you say to the people that are kind of like, they want some type of regulation, or they kind of staying away from it because they feel like it's not safe, and that narrative surrounds DeFi pretty heavy. So did you guys kind of want to speak on that?
Yeah. I mean, what I will say is that, I've personally been using the Metallicus ecosystem for DeFi for 3 years or so. And the reason that I chose to use them is because they were ahead of regulations, right? Regulations are KYC being mandatory. The IRS actually came out this year and said that mandatory KYC for all DeFi front ends by 2027. And Metallicus ecosystem has had that since 2022. So to me, that's why I use that specific platform for my DeFi, because the writing is on the wall. They're doing what's already coming. In order to use the Metallicus ecosystem, you have to KYC as a retail investor. And literally, they're telling you in these regulations, KYC, AML, that they keep using the same monikers. So, me personally, that is why I use the Metallicus ecosystem for DeFi, and everything else, it's just kind of literally reading the documentation, right? Do you trust the devs? Like, are they public? Do you know where their wallets are? Things of this nature. So that's how I make my decisions when it comes to DeFi specifically.
Okay, Aqua, did you want to chime in on that?
Yeah, I mean, I would say there's nothing stopping those mindsets from at least learning DeFi. Regulations are not here just yet. That's a great excuse. I'm just hoping it's not like a coping excuse on, not learning DeFi, because I feel like when people say they want to hang on to these assets for a lifetime, the only way I see that working is if you got it working for you. Like, there's no way I feel like people are going to be able to hang on to their XRP at $100 and just let it sit in cold storage. I mean, if that's you, great, round of applause. But like, I don't see that being everybody. And how, again, you hang on to these assets for a lifetime and pass them down to your children is by
My bad, y'all. I forgot I was on here and clicked off doing stuff on my iPad and forgot y'all couldn't hear something, couldn't hear nothing. But YouTube is up, so y'all, Block Nation YouTube.
Blockchain is going to be here for the next 1,000 years. So, like, you know what I mean? Like, our bloodlines, if we teach them correctly, we could really keep these digital assets in our bloodlines for, many, many times to come. You know what I mean? So that's what I have.
I think that was some good insight. I think this I was anxious. I was hoping someone was gonna come up here and object or for some good dialogue, respectfully. Because I know some people are not fans of DeFi at the moment. So I was hoping to see someone play devil's advocate here, but because of course I agree with y'all, so I don't have any I don't have any like pushback on it. But no, I definitely 100% agree. Like your assets can definitely be making you money. I think I really want to talk about Metallicus too, and I'm glad DeFi King brought that up because I think a lot of people in the XRP community sleep on Metallicus, and I don't think it's like intentional. I just XRP is a great asset. Of course, the utility behind it is phenomenal. So I think it's gonna be hard to beat that, but I think because of that, it blinds people from other projects. And that's another toxic part of the space that I don't like, that I realized I didn't like over like the past like year or two. Just kind of turning a blind eye to other projects, and I think a lot of people don't know how deep Marshall and Metallicus go. So if you want to kind of go there with Metallicus, DeFi King, feel free.
I mean, I'll first start off by saying I don't know what's in everybody's heart, but most of us are here to make money. Like that's what we came here to do, and to learn how to make our money work for us. So that's what I've been trying to do, right? I came into this first as just a pure investor, just learning how to invest in stocks and bonds and things of that nature. And then I found out there's something that's a little bit more risky that has a lot more, of a higher reward. And I was like, okay, let me go learn what's going on over here in crypto. And I assume that's most people's journey, but I can't speak for everyone. So wherever you start, that's okay. But as you are in the space for a while, the way I looked at it was I came in and everyone was telling me XRP was the best thing since sliced bread. And I said, okay, cool. So I looked into it. I did some research on my own. I was like, okay, that checks out. And then I said, well, what else is there? Like, as I'm watching Brad and watching everyone talking about this and people saying it's not all going to be one ledger, I said, okay, it's not going to be one ledger. Where else could it be? Where else could it go? Who else could win in this era of blockchain and crypto? So then I just started to do research. Who's in close proximity to XRP? Okay, Stellar. Who's in close proximity to Stellar? And I found Metallicus and Marshall, who's in close proximity to them. So I'm always just looking for 6 degrees of separation, as close as possible to the thing that brought me in, which was XRP. So, I think people there's nothing wrong either with being pigeonholed into something. I don't, like the toxicity is when you attack others or talk down on other projects. To me, it's like, okay, you want to stack XRP and you don't want to look at anything else? Cool. No one's stopping you from doing that. But if someone in your group or in your party wants to learn about something else, I don't think that you should just try to hold that person back from expanding their options. So, I'm always about learning. For me, it's just about learning, and absorbing information. And if I can make some money somewhere else, why not do that? So that's literally just all that I did. Once I understood how the space worked, hey, I love Stellar. I don't know if any of you guys have followed any of my content or anything, right? I'm a big Stellar head, so like I went to the Stellar side, and then that's how I found Metallicus and Marshall. And between the three of them, Metallicus was the only one that had a working DeFi where I could put my assets to work for me for staking, farming, liquidity pools. Once I learned how all that worked. And I just went there because I was like, okay, I park my money here. I come back the next day, there's more money. But why wouldn't I do that? Right? So it's just what your appetite is for risk, what your appetite is for learning. And at the end of the day, there's nothing wrong with staying where you're at if that's where you're comfortable. But, to me, I just love to learn and I love to teach people what it is that I know. So I will always expand on anything, especially if it's going to help you, and one, increase your knowledge, and two, add money to your pocket.
There we go. There we go. I don't know if anybody has any feedback on that, but but I 100% agree. I'm all about where can we make money at right now, because it's one thing we know XRP, XLM, and all these protocols are going to be great, but people still have to touch grass, and so you still got to figure out how to make some. I'm a risk taker though. I'm a risk taker. So I don't mind getting into some protocols with money I would have probably blew on sneakers or clothes. So I don't mind getting into, but some people are very different, so I completely understand. But I don't know if anybody oh T, go ahead. I see your hand. Sorry.
I was just going to piggyback off of what DeFi said. Look, the only thing I've ever told people as far as diversification is don't over diversify, because the rich don't get rich doing that. All right. If you listen to what he said, he only named 3 projects, right? The problem in the crypto space is that people start chasing too much and spreading their money too thin. If you're not working with, tens of thousands of dollars in capital, and maybe you got a few hundred here, maybe two grand there, etc., you need to be focused more on building your position up in something that's cost effective versus chasing a ton of stuff at one time. Fortunately, there are low cap projects out there that are fairly cheap. I know I don't know much about Proton. Outside of what I researched via the white paper and a few other things, and Metallicus, and some of you may remember I actually did a space with Marshall Hayner to kind of put some of the silliness to rest regarding the tribalism. And if you were in that space and you listened to them, you'd probably be on board with leaving the toxicity where it's at. Because in the white paper, it exclusively stated that they had desire to interoperate with the XRP ledger in the first place. So, the whole tribalism thing is silly. Just don't invest in scams, and don't take a little bit of money and spread it to a lot of places, and you'll be fine.
Exactly. Thank you, T. Exactly. What's good, Lex? No, I think a lot of people had it confused, gang. I think a lot of people had it confused because when DeFi King would started sending me stuff on Metallicas, I was flabbergasted. I didn't know about this. So, especially I know DeFi King, you sent me a bunch of stuff last night regarding you think KYC is gonna be mandatory by 2027. Did you want to elaborate on that?
Yes, so I'd mentioned it a little bit earlier, but you guys can go research this yourself. The IRS came out with guidance for crypto, and one of the things that they mentioned was that DeFi front ends, which would be your DEXs, anything that us retail interact with to purchase crypto, to deploy our crypto into DeFi, anything like that, the wallet itself, would have to have a mandatory KYC. So they would enforce that on the platform because they really haven't figured out the wallet yet. right? So if you're in the XRP ecosystem, you're using one wallet. If you're in the Stellar ecosystem, you're using a different wallet. If you're in the Metallicus ecosystem, you're using a different wallet. So until they narrow that down, the guidance starts with the front end that you are going to interact with, where you connect your wallet to. That person will need to KYC and know exactly who you are before you deploy your assets, your fiat, into their platform. Same with the things centralized exchanges already do. It's just DeFi platforms do not, right? So if you go to use Uniswap on Ethereum, you don't have to KYC your wallet or tell Uniswap who you are. You can just connect your wallet and use it. But for example, if you were going to use MetalX on the Metallicus ecosystem, you would have to KYC before you can deposit your fiat or your crypto. So that part is going to be mandatory in 2027. I do see someone's hand up. I want to kind of give some other people a chance to talk here.
Yeah, I can speak on the KYC part. You know, I don't want to shield nothing or anything like that, but as a person that is actually developing a project that I feel like has a real chance, you know, knowing the customer, it really comes down to the person. Like, do we understand business? And if we actually understand business in a real world aspect, we'll be able to know that if when it comes to taxes and things of this nature, accepting money, especially on digital platforms, you got to know who you're dealing with. You just can't accept, the saying is, all money ain't good money. So with these DeFi platforms, like, hey, I do real estate tokenization. I'm building my stuff, yada, yada, whatever, but I'm not accepting any money from anyone if you don't want to like verify yourself as a real person, go through the KYC, have the AML stuff, the anti-money laundering stuff in the background. Like, it's no point of even trying to work around the rules that are already here. Like, really nothing is actually changing from real business to like this blockchain space. It's literally the same thing. And what blockchain really is, it's just another piece of tech stack on the back end of your business that enhances specific things, you know, like payment processing. And if you understand payments, you understand that you have to know who you're dealing with. So, I mean, I can speak on that as far as that goes right there. So, like, I don't think that any platform moving past, if you're building, this would be my advice. If you're building, build an actual business. Don't think like, hey, Bitcoin, you know, F the banks and all of this stuff, because when we talk about DeFi, what DeFi is just creative financing. Here, I'll break it down because I'm literally doing this. So what DeFi is, if you go get a loan from a bank, say for instance, you give me $100, I say, okay, if you give me $100, I'll give you X amount. Give me $100 for 6 months. You will get X. If I go to a bank, I can pay you, or even out of this, you give me $100 for 6 months. You don't know what I'm doing with this $100, but all you know is you're getting X amount. Out of your $100, say 10%. 10% of $100 is $10. I can literally pay you $10 or put that right over there in a wallet and disperse it how I need to disperse it. That's like what DeFi is. But what the platforms are doing with this on the back end of it, they have these wallets. They send all this money to the wallet. It looks like a transaction. Some of these things look like actual sale of a retail product when it comes to the paper side of the real business, because this is real business. So I'll break down this example inside of this example, and I don't want to confuse anyone. If you tokenize real estate, if I sell a token, depending on the way that I sell it, it looks like a retail sale. It's nothing more than selling a t-shirt. So if we have a $90,000 property and I sell a token, say we got 100 tokens for $900 a piece, and we sell all 100 tokens, raise the $90,000. You literally just basically generated $90,000 in revenue if you sell out all of the tokens. What that does for you in the real world is, hey, this is real money. I can take this to the bank. I can take these tax documents to the bank, and I can show them, hey, we just made $90,000 in gross revenue. Now, however you want to do the taxes on the back end of that, yada yada. So what they do with this, you need the paper. You need the banks for DeFi. You can't do DeFi without the banks, or you can't do DeFi without group economics in large sums of money, because you gotta be able to go get more money from the money that you just raised, and from the money that you just raised, and the actual tax documents, the paper, you can go leverage that money. So when they're paying you 4%, 6%, yada yada yada, that's literally what they're doing. They're going to the bank with all of these numbers, their tax documents, to say, hey, we did this, we did X.
Where my mods at on YouTube? Mods, please do your job.
And they're paying you.
Good gracious.
They just got $1 million, and they're paying you 4%.
Because a lot of y'all are not informed on crypto. If y'all don't know that your banks is upgrading to blockchain technology, if you don't realize the payment rails that we're going to be using is based off blockchain technology, please don't comment.
You see, like, how these crypto.
Please don't comment, because you're literally uninformed. You literally don't know what you're talking about. The stock market is being tokenized on the blockchain. The DTCC has all the information you need out on that. So please go do your research, because the DTCC wouldn't be getting involved in blockchain if it was this scam that XX is talking about. So
access to this, that's literally what DeFi is. It's nothing more than creative finance. But I'm building, so I understand it. I'm in creative finance. I'm not no guru or nothing like that. I've only been studying this stuff for 3 years, but I study banks. Like, I literally study banks, assets up under management, all of that all day long. So I understand how to create a product. I understand how to create my own financial product. If I want to create a loan right now, like a debt service coverage ratio loan, I can create that. It's just private funding. It ain't nothing. It's not nothing difficult at all. But that's the back end of it, and I'll rest my case right there.
Okay. I don't know if Aqua or DeFi King wants to respond to that.
I'm just kind of confused. Can you elaborate on, like, what you mean by we need the banks for DeFi?
Well, the customer doesn't need the bank. The customer doesn't need the bank. I need the bank. Excuse me. I need the bank. So if you understand, like, well, not you. I don't want to say it like if you understand it, but I need the bank, because with real estate, this is why I'm tokenizing real estate. With real estate, if I go get a piece of property and I own it, I can actually tokenize it. That's a whole nother story. People are talking about tokenizing real estate. You can't tokenize real estate. You can't tokenize the ownership.
It's about to get
of real
interesting.
estate if you don't actually own the deed, the title. If you're still paying mortgage to the banks, the bank owns that. You can't tokenize that. You can tokenize the equity when you do a HELOC loan, or you can tokenize the equity on a refinance, but you can't tokenize ownership in that property or that piece of real estate like people are saying you can do. Now, you can tokenize access to the property. Hey, you wanna come to my house? We want to have parties here. Blah 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 blah. Whatever you want to do, here, buy this token. It gives you access to the property. No token, no access. But ask that question again, because it's a lot of misconceptions when we talk about, like, tokenization and all of this stuff, and how people they're
I don't mean to interrupt you, bro. If you could just go back to the banks, though, I'm still confused on that. We could talk about tokenization.
Yeah, they asked the question again. That's what I just said.
Wait, say that again.
I said, then ask the question again. That's what I just said.
Yeah, okay, so, because you said that DeFi needs banks, and I don't agree with you on that.
No. Businesses need banks. Businesses need banks, and people who understand business know they need the banks, because you don't build with your own money. You build with other people's money, and that's why you go to the bank. That's why you go to the bank, because that's how banks make their money, by lending. So if you know how to go get free or cheaper money is credit. Cheap money is credit. If you know how to do your credit and business profiles in real life, like when people do credit repair and all this stuff, if you know how to do your personal credit and get your profile in a specific spot, or a specific, you have this and that on your personal credit profile.
I don't really know him. I just met him on the last Space Light yesterday.
Profile, you can now essentially walk into the bank and go get leverage money. It's just like a credit card. That's cheap money. A credit card is cheap money because you didn't have to put up any dollars to go get a credit card. But with a credit card, I can go get a $50,000 credit card. I can go get it on my business credit profile, or I can go get it on my personal credit profile. If you know the credit game, you would want to go get it on your business credit profile, because it doesn't affect what is it called? It's like it's like a ratio. You don't want to have a credit limit of $80,000.
Yeah. Cypress is in the space, and Aqua and DeFi King. Oh, he's about to get cooked.
So with business credit, it doesn't affect your personal credit. So this
God, he about to get cooked. As soon as I figure out what he's trying to say, he's about to get cooked.
Need the bank.
He a cool dude though. He a cool dude. The DeFi shit, he gonna get cooked though.
Get the $50,000 if your business credit profile is in a certain position. So this is what they're doing and using to fuel their investments. I go get money from the bank that I don't have to pay for. I pay a monthly note on it, just like when you have a credit card, you have that minimum payment when you spend it, but you never had to spend $1 to get a credit card. You just had to be, your credit had to be in a specific position to go get, to be even eligible to have access to the credit card. So we'll go back to the bank thing. If I go get $50,000 from a bank right now, I can go get a piece of property, put a tenant in there, get a property management company to manage the property, I don't even have to find all the people, because that's what property management does. Now, essentially, I'm just an investor and I'm getting money from that property. And all I have to do on $50,000, depending on how you leverage it or what type of bank product you choose from that, $50K usually around $600 to $700 a month. If I can find an investment that pays me $800 a month and $50,000 a month only costs me $700, I'm making $100 off of nothing. I didn't even have to read. I didn't have to work for the money. I didn't have to do nothing. I just had to understand the business. And I went and that's what they're doing. They understand business. They understand credit. And that's why they need the banks. Why do you think Ripple is like banking? Why do you think Ripple is about to launch their own bank pretty soon? Because why do you think they got XRP? They ain't trying to let go of it. XRP is an asset just like a piece of real estate. So what I believe Ripple is doing, just to tap into this, if I have 50 billion XRP, however much it's worth, if I can create a financial product and I'm trying not to cut him off. Y'all know that's hard for me. This is why now they're accepting cryptocurrencies as bank. Because what is this got to do with DeFi, gang? Oh my God, gang. And say, hey, bank, I got this collateral. Just like a piece of property is collateral when you do a debt service coverage ratio loan. Say, hey, I got 50 billion XRP. Say for lack of better terms, it's worth $100 million. Sure, I got $100 million right here in XRP, which is a hard asset.
What's he conveying? I'm outside. What's he conveying? Because I'm confused. So help me out, please.
The bank is going to say, okay, well, we're going to take possession of this $100 million, but you can get your $100 million back. Right now, what we're going to do is give you 50 to 75% loan to value ratio of based off of the cost of this asset, or excuse me, not the cost of the asset, how much you put up for collateral. So they're going to be able to literally leverage their own asset to go get more money, and then they're going to be able to get the $100 million back once they pay the loan. But I can go put up the $100 million to go get $75 million, and the $75 million, this is just all hypothetical numbers, the $75 million cost me just say $100,000 a month. That's it. And that's literally what they're just leveraging credit. That is what DeFi is doing. That's why they need your money. That's why they need your assets, because your assets to them is credit. Crypto is the new form of credit. And now when you combine the crypto with the real banking industry in the real world, now
gotcha, Brady. Gotcha. I'm outside using the bank for leverage
that you can use.
Okay, he's explaining how leverage is just borrowing money that you use to make money off of. He's complicating it because he doesn't have full understanding. Okay, gotcha.
It's a real business. They're tracking this.
Because I didn't know where he was going. I slightly have ADHD, so he been lost me. What you talking about?
Your banking information, your business information. Say, hey, we just raised this much money. Boom. And you can take that to the bank and go get more money with it. But the cool thing about it is, like, there's 4,700 institutions as of June.
Oh, but the question is how DeFi needed banks
in America.
I'll say that. I got you.
Banking and financial institutions. That includes digital, wallets, regular banks, credit unions, private equity funds, larger ones like that. And if you want to fact check me, you can. Y'all all can do this right now. Pull out your phone, go to ibanknet.com. You can look up all the banks in the world. Domestic banks right now. All the credit unions in the world. You can see what these banks specialize in. You can see their assets up under management, and you can figure out, based on what type of business you do, I'm going to figure out what type of bank I want to go to. So if I know I specialize in construction, my company, my real world company specializes in construction, I'm not going to go to a bank that doesn't offer construction loans or specialize in that. I'm going to go to the financial institution that specializes in that, because they're going to be more they're going to have the product that I need. So
okay, I want to give him a chance to respond. I want to give him a chance. Okay.
So yeah, I guess I kind of get what you're saying as far as like going and getting a loan from the bank. I mean, you would still have to, pay the APR, APY on it. But now you had said if you have X amount of dollars in XRP, so like, are you familiar with like Uniswap?
I don't really pretend. Yeah, I'm familiar with all
Uniswap,
of that.
Aave, my bad.
Yeah, I'm familiar with all of that. I don't really participate in DeFi because I don't need to. I don't trust the platforms like that. I understand the business behind it. So it's like... Okay.
Because I think that's the part that you possibly are missing. I feel like you are right in some ways, but like the fact that you had mentioned take our XRP to the bank, in my opinion, that's like the last thing I'm going to do if I have 5 other options outside of a bank. Like Aave, for example, we can, lend and borrow against, there's like, I don't know, probably 20 different assets. I know XRP is not one of them, but there is the Metal X platform where we could borrow against our XRP, and to pay it back is a sliver of a percent. So it's like, it may be what you're talking about. That's, for maybe like the masses, and because I strongly feel like the banks are going to adopt this technology and they're going to offer lending and borrowing on our assets. But like, again, those that are doing the homework now and paying attention to what's happening now, the fact that we can borrow against our digital assets right now is so powerful, regardless if we're participating or not. There's $115 billion TVL in DeFi right now. So
private funding. So what you're talking about, Aave, these are private funds behind. It's a business behind this crypto thing that nobody sees. It's an actual, what they're doing. It's just a big hedge fund. It's nothing different than like regular business. But if you, how you position it, how you market it, they're not going to tell you the business behind the business. Because if you tell anyone, hey, if you get your credit together in real life, it like my people work at a bank. I know more about banks, like the internal workings of banks and how banks make money than they do. Like they don't even understand the bank. They just know how to cash and do the teller stuff. It's a business behind it. And all it is, all Aave is just people with a lot of money, and they say, okay, we're going to be able to.
So are you saying? Because I'll just use I don't know, XRP as an example for people who got in mad early, for people who got in at like 0016 or something. If they have, so clearly they would be in great profit right now at 230, however much it is right now. And let's say their credit's bad, but they could borrow against their XRP, but they're, what I'm saying, they don't have good credit. Wouldn't it just make more sense for them to just borrow against their XRP instead of going through the hassle of trying to fix their credit and waiting 6 months to a year before they're able to take out a loan? I don't know, they may be having car problems and need to buy a car. I think what they may be.
Life happens too. Not to cut you off real quick, Queen, but life happens and people catch like medical bills that fuck up their credit for a lifetime. You know what I mean? So like, it's not only. I understand that I'm not trying to be rude or nothing like that. That's you. The crypto is credit. That crypto is credit. I would recommend somebody doing that, but that's not the business behind these platforms. You all are talking about the consumer part. I'm talking about as a business person, someone that's doing the business behind it to give you all the option to come on my platform. Don't say
Cypher's
my platform,
about to speak.
but a platform to say, here, I'm going to give you this if you give me that. It's all just contracts. So it's like on the back end of the actual business itself, what people do is you can depending on how you word it, depending on how you structure your business, depending on how you accept these digital assets and things of that nature, what you can do is say, hey, we need 100,000 XRP. If we have a liquidity pool, blah blah blah, all this stuff, we need 100,000 XRP. We're gonna have this thing. It's only for 7 days. You have 7 days to get in. You're gonna get 20% APY. So everybody puts 100,000 XRP into this thing. Boom, 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 boom. So everybody's getting their APY, but on the back end, that's the consumer side. You don't see the business behind it on the back end of that.
So yeah, that's why I'm gonna let Cypress let me have Cypress speak real quick, because they really hadn't really got to respond properly like you have.
What's going on, Ash? What's going on, Uncle? And I don't know the other gentleman's name, but what's going on, Tuksun? Fiction? Yeah, sure.
I feel messy right now. I was
just chiming in, and you said that Aave is like a regular business. There's nothing different about it. I'm gonna be honest with you, brother. I gotta completely disagree with you. Saying Aave is like a regular business is like saying that email is just like another letter. Aave not necessarily replace banks, but is enhancing the financial ecosystem with code. It's borders with permissionless access and gatekeepers with
send a request.
It's not business. It's a protocol. So it's not a company. Traditional businesses are typically registered entities with like CEOs and boards and office leases and employees. And Aave, on the other hand, is decentralized tech. It's open source. It's a protocol. It allows peer-to-peer, not peer-to-peer, peer-to-pool lending and borrowing without intermediaries. It has nothing. It's nothing like a business at all whatsoever. Actually, it's code. It's not a corporation. It runs autonomously. It's on the Ethereum and multiple other different chains, and allows pretty much anyone in the world to access it permissionless 24/7.
Coop, I don't see you.
Nothing to do like
I can't bring you up. I don't see
many
you.
Other different things I could say. It's built on smart contracts, not paper contracts. You were talking about paper contracts a second ago. Like I said, it's borderless, it's permissionless. It puts users in control instead of where traditional businesses, they focus on customers. Aave users, can also be governors and liquidity providers and protocol stakeholders all through the Aave token. You know, governance is all on chain, it's transparent, it's community driven. I mean, I get 110% what you're saying, but I got to disagree with some of the points that you were trying to make when you specifically said that Aave is like any other business, or that DeFi is like any other business, or these protocols are like any other business. You're misinterpreting the technology separation. I 110% agree when you said, you know, they're controlled by people, or not necessarily controlled by people, but funded by people with a lot of money. That I can agree with, right? But we got to separate the ideology behind traditional business and then what's being built out with this digital revolution and this new tech. This is tech. It's a protocol. It's not a business. So that's just my 2 cents. But I'm with my kids, so I won't be able to chime in too much. But I wanted to cap on what you said there.
I let DeFi. I mean, I could rebuttal that all day because people still had to make the protocol and
I get what you're saying. I don't mean to cut you off. I'm gonna make it. I'm gonna put it in layman's terms. This is what he's explaining about the business. Aave, the business itself, allows you to come deposit any token, or not any token, but whatever tokens that they have, so that you can borrow against them. But if retail doesn't come in there and put any USDC, where are you gonna get the money from? Aave is the one who has to put that money. When it comes to the liquidity pools, like where does that money come from to initially start it? Like on MetalX, for example, if you or the Metallicus ecosystem, if you stake your XPR, where do the rewards come from? They come from the way the business is set up, the way Marshall set it up to where you are getting that from inflation. So that's what he's explaining is the back end. It doesn't matter if XRP goes to $10,000 and you go to deposit it in Aave. If nobody puts in 100 million or 200 million USDC for you to borrow, there's no money for you to borrow. That is what he's talking about.
There we go. Literally.
Yeah, I appreciate that, DeFi King. Yeah, definitely put that into perspective a lot better for sure.
Yes, sir. He surely did. And I appreciate him for doing that because sometimes I'm too technical with it. I'm not gonna lie. I'd be studying this stuff all the time, and I speak fast and you know, because my mind be going through millions.
It's all good, man. It's all good. You know, I'm pretty good at breaking things down and being a bridge between technical people and like just normal talk.
Yeah, that's needed. I'm telling you, because people like me need that. I'm sorry, I had to say that because people like me need that type of stuff simplified like that.
I feel like that's something all of us researchers I see T on here too have in common is we talk in terms that like people sometimes it's like our brains can comprehend certain things and now we're trying to put things out, but then people are like, the fuck are y'all talking about?
Oh God. Oh me, bro. Hey, but yeah, that's the business. That's the business behind DeFi. It's not like they're doing anything out of. I mean, they're not telling y'all that though, because they try to make it seem like it's some freaking brand new. Ain't none of this stuff new. Ledger technology is on the back end of banks. That's why we have decentralized ledger technology now. You know, like where we can actually use it because we never had this ability to use a ledger. I didn't even know banks ran on ledgers. You know what I'm saying? All it is just something that records transactions and timestamp stuff. But
I think the significance of it is that we get to participate. I think that's why I love it. That's why, you know, I'm learning it. Is that you get to participate in earning high yield on assets. So I think that is why some people are intrigued by DeFi. That may be part of it. It's of course there's other factors. I'm just speaking for my experience. And why I kind of got into it, but I think it's the opportunity that it presented. Oh, go ahead, DeFi King.
Yeah, and just one last thing I wanted to add is, you know, that is one of the reasons why I'm not going to speak for him, but people who don't trust DeFi as it is today, you're putting all your trust in Aave. You're putting all your trust into Marshall. You're putting all your trust into whoever runs that business. And I've read the docs. MetalX literally says you are willingly depositing your tokens. And if the shit goes belly up, like your ass out is basically what it says. Versus when regulation comes and the bank comes and tells you, yeah, you can deposit here. We're FDIC insured. That is what people are waiting for.
Yeah, and I respect that. Oh, go ahead, T.
You know, it's funny that he said that because we had a space, me and Baggins, where we were talking about some of this stuff, and he's absolutely right. You know, what they do, a lot of people don't understand that some of these third-party apps that deal, or companies that have DeFi platforms, it's not the chain itself that's running it, right? Like, just like Uniswap, for example, is a third-party exchange solution for ERC20, right? Well, you may have an organization that's being sourced for their DeFi through an exchange, right? For example, let's say Coinbase offers you 5% yield on your USDC staking, right? It's not really Coinbase. There's another organization doing it through them. And what happens a lot of times is it's contingent upon market conditions. So if you don't read the fine print, I've seen this happen to people where they deposit, you know, a bunch of money into these platforms and trust them. And then when the market conditions tank, they get liquidated. So look, man, I'm all for DeFi and all of that. I'm also for favorable regulations for these mechanisms to be able to thrive. And I'm going to tell you this. If you do any of this stuff, make sure you read the fine print first.
So okay, so I know Cypress and Aqua. Okay,
I also think too, though, you know, like a lot of people got to get out of this mindset that this stuff in a certain aspect of DeFi is not regulated, right? I mean, we're seeing innovations take place at a rapid pace, and it would behoove everybody to keep up with the changing tides and not marry an outdated bias that the landscape in DeFi is the way that it was in 2022. For example, for the first time ever in history, Solana, Drift Institutional, and Apollo, along with Securitize, made an announcement on stage at a recent Solana event offering TradFi yields upwards of double digits, 16%.
See, I like this dialogue. I like stuff like this. Platform, everybody has, get informed.
You know, certain backings and valid credentials where institutions are for a fact right now implementing capital onto that platform. Another platform I'll orient your attention to that just garnished recent attention is Figures Markets with their YLDS stablecoin token that is SEC regulated. It got SEC regulatory approval in February of this year. So there's things that are happening in this space that a lot of people are looking for when it comes to regulatory developments, but it's like they're not paying attention to them. But I agree with what Ash said a second ago, how it definitely creates this sense of a level playing field. DeFi, in a sense, gives access to things like fractional ownership or real estate investment through real-world asset tokenization that people that were otherwise quartered off to these types of investments because of lack of capital now have access to with very small amounts of capital, which is phenomenal. To cap on what DeFi King said, you're absolutely right. You're putting your hands or your funds, in the power of these people's hands. You have to be able to trust the protocol. That means you need to go in, you need to look at audits, you need to look at what's backing their protocol, what funds, you know, how are they orchestrating their yield? Where's the yield coming from, right? Things of that nature. And so if you can...
Oh, I think Cypress might have had to get his kids, but Aqua, I saw your hand was up.
Yeah, I just wanted to go back on that topic real quick with DeFi King because you broke it down in layman's terms, bro, and I usually love having in-depth conversations with you, and I'm kind of confused now that we're saying that there's like business capital that are paying out these yields because I thought these protocols paid out yields based on like how it was set up and like whether it's, you know, fees that the protocol generates and that's how we get our yields. So am I just completely off on that now, DeFi King?
So it just depends on the platform. So I'll specifically narrow down to MetalX because that's my favorite DeFi platform. Okay. So when you stake your loan and you stake your XPR, the rewards come from inflation. So they're printing more tokens and diluting the tokens and giving you the rewards from new tokens. So that is where the yield comes from specifically on MetalX. So in the farms and the lending, borrowing, all of that, that's where it's coming from. So he set it up that way. By he, I mean Marshall. And I don't know if he plans to change that. I don't know if that's, something he's going to do now. And then once regulation comes in and, he gets some bank money, he might change that. But as of right now, that's how he seeded his platform. I haven't read the docs on Aave. I don't use Aave, so I don't know where Aave gets its yield from. But they should explain it to you. But basically all that was saying really was any one of these DeFi platforms, they either have to wait on retail to deposit. For example, I'm just using $100 million because it's just an easy number, a round number, $100 million in USDC to their lending platform so that others can borrow from that $100 million. So they're either waiting for all of retail to dump that in, or they're seeding it themselves, or they're getting it from venture capitalists or whoever to then deploy that capital so you can come deposit your XRP, your Ethereum, and borrow against it. Because most people borrow in stables. Most people deposit XRP, Ethereum, Solana, whatever it is on a DeFi platform. And when they borrow against it, they borrow in a stable coin, the USDC preferably right now. So that's all that really was explaining on the business back end. Every business is different, and how they pay their yield is you have to read their docs and see where it's coming from. Right.
Okay. I want to see what Coop has to say real quick since Coop hasn't spoken. Go ahead, Coop. I see your hand was up. I must have walked away.
Peace, everybody. Listen, first, Ash, I want to say, this is huge. This entire chat, this space, you really got to do more of these spaces because this is just a conversation that's necessary. This is how we, this is really like a steel sharpen steel moment because it's not about, this is not about being right or wrong. The amount of space, no pun intended, being between right and wrong is very, very wild because we don't have on one half of the spectrum, people have to realize that everything that they know about DeFi or cryptocurrency in general was born in a wild, wild west.
Mm-hmm.
We then have to the complete opposite end of the spectrum and say, well, what happened after everybody on the planet just didn't get Bitcoin? What happened? It was a decentralized network away from all governments. Once everybody didn't get a little BTC and Mt. Gox happened, that's when we lost a real shot at having actual decentralization. Right? So on the other end of this spectrum is what happens when the government starts to pass, because we haven't even talked about DeFi regulations. We still trying to get crypto regulations. DeFi is 100% going to go through its own regulation period because it has to. Because at the end of it, it is just banking processes. It is borrowing and lending. The same way USDC has to go through a process of, okay, well, we have some rules on the board for this. DeFi is going to have to go, we have some rules on the board for this. What companies set themselves up to be in a period of the Wild Wild West not going to apply if the government doesn't apply. If the government says it does apply, then it will apply. But the government is going to make the final decision on it. But it's hard to say specifically because I'm on the other end of it where, I'm with the DeFi King and the other gentleman. Listen, bro, I want to be able to pronounce your name, but
Fiction, like fictional story.
Cool. I agree with Fiction and DeFi King that banking was always going to get involved in DeFi, even if we look at it from crypto perspective. Coinbase has come to replace banks, traditional banks. They'll probably do that to most of them, but JP Morgan, Bank of America might even sail down to JP Morgan at some point, and most of these credit unions will go poof in the air. Coinbase is looking to replace just banks in general. Coinbase at some point will lead the market in DeFi. They already setting themselves up to do that. They've been setting themselves up to do that for a while when Base was introduced, because Base is a decentralized network. So a lot of DeFi companies are built on Base. I invest in them. But I know that even though those are going to be decentralized network, the underlying insurance for all of those different companies that's still going to need to be insured is going to be Base. I mean, it's going to be Coinbase, and all of the Bitcoin or whatever it is that's the most expensive at the time. It's always going to be Bitcoin, in my opinion. But I know some people feel different. But in my opinion, like, it's going to be underlined by Base, which is just going to be new banking, because they're going to follow all of the rules of banks, and the government is going to change a couple of rules to look like certain things. But at the end of the day, it is going to be regulated by government, because if you have somebody to take to court, as XRP holders know, you're going to court if it's something that they don't like or they were set up for.
Okay.
Hey, can I tap in? I'm in the middle of a call real quick. I'm in a data center, but I want to say this real quick. I'm gonna just be 100% transparent, bro. It's not a finesse because it's business. It's business. They're not finessing because it's business. But if you came up in the streets, it's a finesse because they're not keeping it 100 with you. You know what I'm saying? If I say, hey, I can give you 4% out of the money that you just gave me, because if you give me $100 and I give you 4% of $100 every month or whatever, all I'm doing is giving you $4 a month. So you're paying essentially for your own APY. Literally, that's what you're doing. But what they do on the back end of that to give you all of your money back is they go make an investment as well. So they go make an investment with the bank money that they go get from the banks, and then they pay you out of your investment that you made. So what you're essentially doing is getting two different sources of funds, and that's what DeFi. That's what they're doing. But I gotta go, y'all. If anybody follow me, I'll follow all y'all back or whatever. Ash, we're gonna chop it up, and T, hopefully we chop it up, man. I gotta get up out of here, y'all.
Okay. Yeah, go. Cypress, did you want to respond to that?
No, I was just going to say, I apologize earlier. I told you guys I was with my kids.
I
was going to tap on what Cooper said, and again, I guess just what everybody's saying here. I think in general, and what somebody said before, I don't remember who it was, but I think it was maybe DeFi King just talking about, a risk-based approach. Like, everybody needs to understand that getting involved in DeFi adds an extra layer of inherent risk that being involved in crypto already exposes you to. And so that's something that we specifically talk about in our community a lot, is risk mitigation and how to mitigate against risk if you are going to introduce DeFi to your portfolio, and how it does add an extra layer of risk exposure. That's something that everybody has to comprehend, but that does not mean you should ignore educating yourself, right? Education, you don't really need to risk your crypto to educate yourself, to read a document, to read a white paper, or to go on to a protocol and read, like DeFi King was talking about MetalX. You can go on MetalX and read the docs thoroughly, thick and thin, and use artificial intelligence to digest the docs for you, ask a whole bunch of questions, and educate yourself on it without risking your crypto. That's personally what I suggest everybody on this call do after you get off. If you don't know about DeFi, or how to start participating in DeFi, just learn about it, right? You don't need to. It's like everybody has this saturated taste of DeFi in their mouth because of everything that we've been through in the past, and that's understandable. Don't get me wrong, because fear is part of these markets. But push past that, and if you follow people like T, you follow people like DeFi King, you follow people like Mr. Aqua, and many others out there in this space, you push past that veil of fear
that keeps you held back from misinformation and misunderstandings about this space that keep you sidelined, and you persevere with education. And if you persevere with education, you're going to one up 99% of people in the space, because 99% of people in the space are so fixated on high price appreciation. When all that stuff is great, it's fine and dandy and all, but if you don't actually understand the technology and what you're doing and how you can utilize it to your benefit long term down the road when things are regulated, then it's not really going to benefit you at all, because you're not really going to know what the heck you're doing ever. So that was just my 2 cents on that.
For sure. I think DeFi King had his hand up first, and then I'll let you go, Cecil.
I just want to double down on what Cypress said. Spend less time watching us and more time reading the docs. Go read the documents. If you are invested in something, you better read everything that there is to read about that investment. Like, this is your money you work hard for. This is your retirement. This is the rest of your life we're talking about here. Spend more time reading. And like he said, now that we got ChatGPT, like, use these tools, man. Know everything there is to know about your investment. Because at the end of the day, you got to sleep with your decisions. No one else. And if you can't read the documents, follow people that read the documents.
No, for sure.
Like myself, T, DeFi King, Smoke, Mr. Man, all these people out there that are actually reading documents and giving you guys links to documents. Like, man, you will never find a video of anybody from CypherX or the team put out some price prediction, because it's irrelevant when you read the documents, right? It doesn't matter. It doesn't matter.
People have to understand the technology that they're invested in, and that's the biggest problem. Yep, for sure. Cecil, I'll let you speak up, bro.
Okay. Hey guys, I just kind of wanted to expound on that question about using your home as pulling out the equity and tokenizing it. Be aware that you can possibly go through, not possibly, but you can go through property. And I'm going to explain this to you because I'm also in banking and I was a loan officer for like 16 years. So it's going to basically function like this. Say you have a first mortgage, right? Property will give you up to 70% total, 70% of the value of that home. So if you already have, let's say you have a small mortgage on it, maybe 30% of the value of the home, well, you can get the remaining 40%, you can tokenize that and pull out equity that way. So you don't necessarily have to go back to the bank just because you already have a first lien position on, with the bank. You still can take that mortgage and obviously, the mortgage has to be recorded and, they have to be able to, have the documentation for it. But you do not have to go back to the bank because, the bank is going to run your credit and all that good stuff. With property, your mortgage is the collateral, okay? And that's what this is all about, decentralized banking and banking the unbanked people, okay? So I just wanted to give a little clarity on that. You can still tokenize the remaining portion of that mortgage and pull equity out.
Hey, that's some good insight right there, bro. Appreciate you for clarifying that.
Sure.
Oh yeah, go ahead, Coop. I see your hand, bro.
Yeah, I just wanted to real quick defend the other side of DeFi to point out Aquaman's point, because this is like I said, it's two opposite ends of this, and it's so wide that we don't know which side is going to win out. But to defend Aquaman's point, we also have to remember where most people aren't considering the fact that the world we live in currently is a lot closer to the past than the world we're about to live in. Like the gap is going to become so wide, right? And so banking and loans and the way banks and loans work is based on a world where people went to work and came home, and if they maybe didn't have enough money, they went and took out loans for different things. We're about to enter a world where the credit system is going to completely erase and have to start over, because your loans won't be on whether you can pay your bills or not. When everybody starts to hit UBI. Like, this is a real world we live in. Most people are going to have their jobs replaced by AI and robots. And when people have to start living off of UBI, people won't. First of all, when they take loans, they'll be taking loans for very niche, specific things, and that will be DeFi. Now, when we start to enter that world and we start looking at tokenomics, we have to wait and see who wins out, because if traditional wins out, we'll do things in a traditional way. But if BlackRock decides to, like, people think the government is in charge. No, really, BlackRock is in charge. If BlackRock decides to take the side of building a new system, then everything we talked about with banking won't matter, because we won't be following that same system.
I think they're taking the new side, bro. I think that's the side that they're taking. I think they want to, with them going. I mean, BlackRock's the main one talking about tokenization and all of these things.
No, that's 100%. I think there's a real possibility for that, Queen. Like I said, I kind of side with the other side just because I'm factoring other things, like, if you do go into World War III and then countries start to pull out their wartime economics, and then BRICS separates with its own thing, and then the United States and, NATO, if we even friends with NATO, into their own thing, I think they will try to force the hand of people to not be doing DeFi everywhere. And if DeFi isn't worldwide, then it's regulated. And if it's regulated, it's just a regular system we in. But there is a world that exists that, crypto and AI make enough money on the planet where governments be like, man, I ain't even think about what they doing.
Oh yeah, for sure. No, I definitely agree with that. It's definitely other factors. So it is like a waiting game to kind of see how, which way this stuff goes. I was trying to read some of these comments. I'm not good at this, guy. Sorry, it's like my second space. But okay, no, that's a lot to read. Sorry, y'all have to give me a second. But yeah, I don't know if anybody had any response to what Coop just said regarding that. I know Daniel, you just asked to come up, so I don't know if you wanted to speak really quick.
I got something. I'll keep it short and sweet. No, I'll keep it short and sweet. Thanks for having the space again, Queen. And I definitely think we'll see something like we've never seen before with legislation coming in. And then we can ask these questions about DeFi and these platforms. Because I know, like, for example, Nexo was in the United States before the last administration kicked them out. But they're still available in Europe. They're MiCA-regulated, and they're in Brazil. And so I definitely understand the DeFi. That's not my specialty. But I would just say, hey, until regulations come into place and whatever platforms go by the way, like Blockbuster did to Netflix, and then use those protocols. Because right now, without laws, it's kind of hard to say. But it'll be interesting to see how that comes along after the fact. And that's pretty much it. I'll let somebody else talk, but definitely regulations will be a huge thing, and I'm anxious to see how that works.
For sure, yeah, that's the main factor. Yeah, that's the main factor.
That's the main factor.
Yeah, I know T's been preaching that for years now. Go ahead, T.
No, what I was going to say is what I first see happening in the future is I think banks become DeFi mechanisms, right? Like everyone's looking at, the activity on chain directly and, working outside of the banks, but which is fine, right? As long as it's safe to do so. But what I do see happening is, and it may not be directly, right? Like you may not even know. This goes back to what we talked about earlier with retail utilizing protocols regarding centralized finance and DLT and blockchain and not even knowing they're doing it, right? Like, for example, you may see a scenario where top correspondent banks go out and accumulate a bunch of different assets and start becoming liquidity contributors for global public liquidity pools. And then they do that. And then in essence, they're, working with the form of passive income via these assets behind the scenes you can't even see. So when you go into a bank and you say, hey, I want to lend my assets to you, you don't even know that they're behind the scenes already benefiting from the arbitrage regarding those assets via those pools, right? That's a kind of a form of DeFi if you're dealing with automated market makers and pools, right? But since they're the larger institutions, they can take the risk regarding permanent and impermanent loss that we can't. So you'll probably, not get the largest percentage from dealing with an institution. You'll probably be able to do it, as far as getting a larger percentage, more so with doing it yourself. But I do think that the banks get involved, and I also think the banks start acquiring exchanges as well and using that pre-existing infrastructure for those offerings for clientele as well. So you'll be going to, a Kraken or a Coinbase, but you won't really know that there's a ginormous institution behind the scenes working with them, right? So I think that's kind of what the future looks like. And I'm not saying that every chain is going to follow suit or, every ecosystem is going to be bank-based, but I think that will be a thing.
For sure. My bad. I got distracted with my niece. But yeah.
And I think that's a fact, because even with payroll, some of the protocols that Ash highlights, like ZBEC or real-time payments or Stellar or Ripple or whatever utility asset that what ends up being used. I know for a fact my mom isn't going to know the plumbing. And who cares about the plumbing other than the plumber? She just wants to know whenever she turns on the sink, the water comes out of it. So if people want to use that on Coinbase, like T says, they go on there and it automatically works. And then you have some people that know the technology behind the fact, and they'll do it on their own. So, but I definitely think the ease of use, that's going to be the thing that drives retail adoption and mass adoption. Just the ease of use and not having to be like, hey, where does this come from? Where does that go? And that's kind of how I see things going. Especially for the masses. It's different for people in this thing because we're probably very, very early adopters to the space, but you have to think about how the normal person is going to interact. When they swipe their Visa debit card and they're paying in dollars, that's probably instantly going to be ROUSD or like whatever. They're going to be in their normal local currency, whether that's Brazilian reals, the euro, the dollar, swipe their card. It's going to be using blockchain technology, distributed ledger technology, but it's just going to be $1 or it's going to be a euro or it's going to be a Brazilian real without them even knowing it. Like Brazil has PIX, that's an instant payment system now, and certain institutions like Ripple have worked with their central bank before. So I can't say they're using it because they haven't said they're publicly using it, but to have real-time payments in your day-to-day use already in Brazil, and they've linked up with certain real-time payments companies.
For sure. Appreciate that feedback, Daniel. For sure. That was pretty much it. I kind of gotta hop off, guys, because I gotta be an auntie. But but yeah, this was some great dialogue. I appreciate everybody for coming up on the panel today. This was awesome. I'm glad this was recorded so people can go back and listen in on it. But hopefully people can take some of the information and take heed to the information, and it works out for you. But we just wanted to really, just to wrap it up, we just really wanted to set proper expectation for next week. I'm not here to sit here and tell you what you want to hear all the time. But of course, we're gonna always remain optimistic, but please have realistic expectations. And I think that was pretty much explained great here today. And then of course, you guys got some DeFi insight. I intentionally brought DeFi up because I think it needs to be talked about. I know it could be controversial for some, but I feel like that needs to be talked about more. I'll probably definitely do another space just for DeFi, just to kind of go there a little bit more. I know Aqua probably has a lot of insight on that, as well as Cypress and DeFi King, and just other people that's in that DeFi space. But yeah, appreciate y'all. So yeah, we'll definitely do another one. And yeah, we'll see y'all on the next one. Appreciate y'all. Thanks T, thanks Aqua, thanks Coop, DeFi King, Daniel, everybody. Thank you.
Thank you, y'all.
Appreciate y'all.
All right. Appreciate y'all, bro.
Thanks for having me on.
For sure. See y'all next time. All right, y'all. Yeah, that was pretty much it. If you want to look at the space, I almost forgot y'all was right here. If you want to look at the space, it's on my X page. Real Crypto Queen. Is my X account. If you want to go on there, Real Crypto Queen. That way, you guys can go back and listen to the space for those that kind of missed a good portion of it. So yeah, I definitely would pay attention to that. I don't think ZBCN is anything special. A lot of change can do the same thing, if not a lot better. SHX and VLO. I mean, their niche is payroll though, so I wouldn't. I mean, I'm not gonna sit here and say that they're gonna be like stellar or anything like that, but their niche is payroll, so that's initially, and then they also have other tasks at here and here where they're trying to pretty much combat like real-time streaming services where people just pay for usage and pay for what they're using. So I think they have a pretty good use case. I would look deeper into what they're trying to do over there at Zebek, other than just the payment side of it, because they are trying to combat some issues like you should only pay for what you use, and that's one of the things that they're gonna tackle as well. Like Netflix, for example, if you only watch Netflix 4 or 5 days out of the month, you shouldn't have to pay full price for the subscription. So that's something that they're trying to I think that they're trying to fix or specialize in as well. So I would just check that part out because I had some people send me some stuff because I wasn't all the way convinced on Zebek when I first found out about it either. And then once I found out more information and read a little bit more, I realized kind of what they were trying to do. So I definitely look a little deeper into it. But yeah, other than that, y'all, that's pretty much it. Y'all will probably see me again in the morning or tomorrow afternoon or something when some more news come out. But hope y'all enjoyed that space with T and Cypress and Aqua and DeFi King and many others. But this is the type of dialogue that we need. That way people can, hopefully we're putting it in terms where people can understand what's going on. That's my whole point, because a lot of people don't understand the technical verbiage that a lot of times that they try and use. So hopefully y'all could understand that. If not, just go back and listen to it. Like I said, Real Crypto Queen on X. Make sure y'all get in there.